Trust you are all well, and welcome to our 15-minute show. Well, today's welcome to our 15-minute show, and trust you all having a good time trading. It's been pretty quiet, at least for me, with this slew of holidays that we've just had, which are now past us. But we are straight into interesting news coming up. Now, you probably heard me talk a lot about news and my rules around news, where if I see one red news announcement, I'm out of the market for 30 minutes, and I just multiply the number of red news announcements by 30 minutes. So, you know, that today, 3 announcements, 1.5 hours out of the market. Now, I want to just share something with you, which I hope you go and do a little bit of exercise yourself. I've just called it the price action story, the impact or lack thereof of red news structure on long-term market structure. Now, the or lack thereof is pretty important for me. What I've put up here is this S&P 500. I did this exercise some time ago, more just for myself to see how red news actually affects the structure of the market on a long-term basis. If you have a look here, the yellow are the CPI announcements. Okay, and I'm sure you've all seen on Forex Factory the news that's coming up today. The green is when we have interest rates announcements. I mean, this is US, of course, S&P 500. I mean, you can do this on any currency pair, on any index, but looking particularly in the market where it is housed. Purple, non-farm payroll. If you have a look and you were here in the market sold off, and we had rates announcement. Now, on the day, this was pretty dramatic if you have a look at it. But the question is, did it change the structure of the market at that particular moment? It didn't. The market was selling off, huge bull candle, tail on top, still sold off, got a doji, had a pullback, and continued to sell off. Jump ahead to the next month. Just before we had the rates announcement, we'd had, you know, whichever way you look at wedge bottom, 1, 2, 3, double bottom, failed breakout, you know, many ways to have analyzed this. Bull candle, huge announcement. Okay, big bull breakout on the announcement. But already we had a wedge bottom, double bottom, and the market just did a follow through on that. So it didn't go and sell off because of the announcement. We go forward to the next month, big bear sell-off. We are at bottom of a larger term double bottom, and the bears are trying to sell off the market. Day of the announcement, big bull candle, day of the announcement. And what happened the next day? The bears selling off just carried on. We go forward to the next month, rates announcement. Just put a case of the rate announcement does not change the structure of the market. Go forward again. Rate announcement does not change the structure of the market. Breakout, pullback, I1 carries on, and we come back. Not to come back, we go forward. Another rate announcement, market selling off, just continuation. And then we get here, lower high, double top, bear candle, outside candle, rates announcement. Now, I would like to invite you to have a look at as many markets as you can and have a look at this. The point is, on the day, there's going to be drama. But the overall long-term structure of the markets, there's a higher probability, nothing's ever 100% certain in this market, there's a higher probability that the long-term structure will remain intact after the news has settled. Have a look at CPI yellow. So these are the yellow candles. So here with a bear breakout and lower high here. And the bears want, of course, the market to sell off. We have the bulls trying to turn the market, testing that lower high. We have an announcement and we get a near perfect micro double top, and the selling off continues. On this day, I mean, of course, depending what could have happened, what came first, huge bear candle buying into the close of the day. But have a look at it. Does that announcement actually do anything to change the structure of the day? It doesn't. Even on the next day, on the follow through, the market still sold off. We come to April 2022. Have a look at it. Same kind of thing that we have. CPI announcement looking, in the day, just like we'll be, for those who are with me on Wednesdays at the market, we'll be looking at the actual day on the 5th. And there's going to be drama. More likely than not, with all these announcements, there's some huge drama. But if you're looking at the long-term structure, it's not changing much, which means if you are taking a trade on the daily or weekly and your stop is in the correct place, you don't have to exit on the daily time frame from your trades. You have to rely on your stop. Of course, intraday, in the day, a lot of things can happen. That's a completely different story. We come down here, CPI, with a doji the day before, bear candle, doji, bear candle, market carried on selling off until it got to, create a low test and reversed. Classic one here. So if you've been in a trade and thought, oops, I'm on a daily trade, news is coming, let me get out of the market, you would have missed out on this. I'm talking about, of course, what's likely to take place on the daily, on the long-term market structure. All throughout here, the market is selling off. And within here, we had 1, 2, 4, 6, 8, 9 or 10 different news announcements, key news announcements, but the market just carried on in a channel. Market did a reversal here, pure price action, not driven by the change, by the announcements that we're looking at. There is a day of the announcement. It's just a doji on the day. Doesn't change the actual structure of what's taking place in the market, and market carries on. And you can see, I mean, look at this one. This is interesting. Big bear, well, not big bear, but the market was selling off. And if you were a bear, what would you be thinking before the news announcement? You'd have been saying, well, I took a short here or I took a short here, and my stop is at the technical level. Maybe you've pulled it down to here, and you're waiting to see what's happening because you're a strong bear, so you're going to wait, you're going to hold, you're not going to just exit out of it. You're not scalping. Don't know many people who scalp on the daily time frame, but as a swing trader looking for long moves, you've assessed all of this stuff and you're holding your stop above here. And here comes the announcement. Big bear candle, reversed all of that. What do the bears think? Bears think, well, it's just a pullback. Okay, we didn't end up somewhere up here where we start to think, oh, if the bull's taken over the market. This was just a pullback, and the bears have carried on lower high, and the market just carries on putting the lower highs. So if for any reason you had exited out of your shorts in here, there is no structure for us to trade. Well, let me not say that. You can always trade any pattern. But for those who kind of trade the way I trade, see the pattern, wait out for the breakout, pullback high one, you would not have jumped into longs. You'd have been waiting. So if you're out of your trades, then you must jump in and keep on selling. So then you get, NFP, purple. You can go through, the thinking quite rationally and logical and see that the greater probability, so it's never 100%, the higher probability is that the long-term structure will remain. There is always the chance that the market may completely change its structure with the news announcement. Here is a possible classic. This was CPI. So bears would have thought double top, lower high. They're expecting the market to carry on, go sideways, but it reversed completely. So that's one of those rare cases where the market would have stopped you out if you had been still holding on to your shorts, and that's perfectly fine. Its probability is lower probability case, but if you look at this whole structure that I have, which is probably in a good part of 2022, the market structure remained fairly intact. Now, when you go into the actual day, when you go intraday now, it's a completely different thing. That's what I want to highlight. The reason I then decide to stay out of the market, before red news announcements, is simply because intraday on the 5-minute chart, the market forces are going to be out trying to control the day, even though the higher probability for the long-term market structures or the structure remains the same. If you ever look at what takes place intraday, it is very difficult to hold on to your stop through all of this. Or let me rephrase that. If your stop was managed correctly, let's say you took a trade here, by the time the market starts to break out here, you have to put your stop here. You're going to get stopped out. Okay. I mean, look at this Hang Seng 50. Wherever you would have put your stop logically, you would have been stopped out and risked slippage, which means, you tell the broker, stop me out, the market just keeps going against you and the trade is still open, spreads and all of those disclaimers that they throw at you would cause you problems. Another market, euro versus the dollar. Again, this is CPI. The impact of 3 red news announcements. So these were 3 different announcements, all taking place at the same time. Definitely I would have been out of the market way before this, just like today, just maybe out of the market, and then wait to see what forms and what comes up before us. So I'm showing 3 different markets: UK 100, Hang Seng 50, euro versus dollar, German 30 against US dollar. Huge reaction from the market. Straight after the market, things start to get a bit of clarity. S&P 500 itself, just people getting stopped out, and I really don't know how people make money from trading the news. When I say let's trade the news, we trade in after the news announcement. We can start to look for patterns that we can definitely trade. Yen, still the same thing. Just stopping you out unnecessarily. So with that in mind, encourage you have a look at where the market is. Look at today's daily structures. We don't have time to go into it now. And just, whatever markets you trade, go to the daily chart, have a look at the long-term market structure and see if by the end of the week, the market structure has changed at all. There's a higher probability that the long-term structure will not have changed. But when you're trading intraday, it's a different ballgame. So if you're trading long-term, daily chart, etc., hold your stops at the correct technical levels, nothing to worry about. Low probability that the market structure will change, but intraday is a completely different thing. All right, traders, thank you very much. If you are with me in our session coming up just now, as far as the Wednesday, the market is concerned, I will see you in exactly 15 minutes, 15 minutes time. Take care. Thank you very much. I shall see you next week. Take care, guys. Bye-bye. Marlon, thank you, boss. Appreciate your support.